My name is Sibabatso and I'm from the Morebo team. I will be interviewing Tancred Melis, who is an executive financial advisor at Morebo Wealth. Tancred, how are you?
No, I'm doing well.
Thanks for agreeing to sit with me. In your opinion, what is Morebo's future?
Well, I suppose if you think about the future, Sibabatso, it's where we start from. I think the great thing about Morebo is it's got a strong client base. It's got a good advisory knowledge base. We've got very, very good advisors. And, you know, some of these advisors have been around for a long time, and then there's new advisors that's learning from the old advisors. So I think we're in a good space to burn, quite a good upside from here with Morebo. I also think with new technology and so forth, we're quite aware of doing, new things with AI and so forth to interface with our clients, so we can be relevant in the future.
And what are you looking forward to in 2025?
Well, you know what is quite interesting is we've got all these new young advisors, and I think in 2025 there's going to be quite a learning curve for these guys. They under a lot of pressure and stress to get their ethics right, get their knowledge right and so forth. And I'm quite keen to see what we look like at the end of the year. So yeah, I'd say that's number one.
How can working with a financial advisor help individuals and businesses navigate economic uncertainties?
Sure, that's a difficult one. Well, I think the key thing is you have to start off with a budget. You know, when you run your business, you have to make sure that your budgets and your planning is relevant. We find with a lot of clients that they're a little bit tardy in that regard and most probably don't factor in, certain things. We also think it's great to build up a reserve cash just in case there's problems for maybe even 3, 4, 5 months worth of expenses. Then we would start with the risk aspect, where you need to make sure that your business is insured, you're insured. A thing like income protection is very relevant to a businessman and somebody that runs their own consulting business, as it were. So we think that once you've got that in place and so forth, we then make sure that there's enough planning for the growth of your business, that you've got sinking funds within your company and so forth that could ensure that if you need to expand or bring on more staff or so forth, that's all there. And then I think after that we start with wealth creation. So we don't just start with, starting to sell, some sort of investment. There's a whole planning strategy for every businessman and consulting individual. Yeah.
Okay. How can a financial advisor help business owners minimize tax liabilities and maximize the value of their business during succession?
Well, the interesting thing with running your own business, especially when you're a startup business, is that you have a tremendous amount of tax deductions. Your cell phone, your computer, your petrol, your car, all of those are tax deductions, your office rental. So tax is not as relevant as, helping to build a structure that you don't pay the banks too much money. One has to always be careful when you're saying paying high interest rates on overdrafts or credit cards and so forth. So you need to be quite aware that your saving and investment structure must include that you don't pay the banks very high interest rates, and you want to have an interest rate payment that at a stage comes to an end. You don't want to have the banks always support your business. You want to make sure you've got enough cash flow to look after your business. So once you become profitable, then it's quite interesting because you pay 27% tax in a business, where you as an owner of a business can go right up to 45% with taxes. So you have to get the balance right of the expenses that the business pay, the expenses that you pay, and even draw out a dividend rather than increasing your income to a very high tax rate.
What role does life insurance play in estate planning?
Well, I think the first thing about a life insurance is that it must be owned by the estate. So the beneficiary mustn't be an outside person or family member. It must be the estate. So the money goes into the estate. Where does that help? It helps that during the phase that the estate's been wound up, that you now have liquidity in the estate to pay for expenses, to look after the family. I think one of the things that we find, and there's so many interesting case studies in this regard, where you have a client which there's too much debt in their estate and they don't have enough liquidity, and therefore they're selling the assets to help offset the debt. So we always say that the life cover must make sure that all the debts in the estate is covered. So that is crucial. With the debts come expenses like lawyers' fees, transfer fees, even taxation. So the life policy must take all of that into cognizance, the costs, the debt within the estate, and then also the taxes. And then lastly, I think what is fairly relevant is what income the beneficiaries require after the estate has been wound up. And that's sort of the last part of your planning with life policies in an estate.
Okay. And how can trusts be used to protect assets and ensure a smooth transfer of wealth?
Well, I think what's happened with trusts over the years, the first thing is a lot of people think a trust is a tax instrument, and it's not a tax instrument. A trust is really an instrument to make sure that you pass your wealth on to your beneficiaries in future. So if you own properties, if you own assets, even a business, and you want to make sure that your family, there's a legacy involved with leaving these assets, a trust is a perfect vehicle to do that. The problem with trusts is that all the documentation and keeping the trust relevant and so forth, there's a lot of knowledge behind it. There's very few players in the trust admin market that actually keeps their records up to date. So you have to be very careful to choose the right service provider that runs your trust. I think that's probably the biggest problem in South Africa today.
Okay, and what strategies can be used to ensure a steady income stream during retirement?
Oh, that's a broad question, but I think the first thing I would say is diversification. So you want to make sure that you don't have all your eggs in the same basket. And then the budgeting is very important. And when I'm saying budget, I've got a lot of people that's preparing for retirement or at retirement that have a budget, but as soon as they start using the capital, the budget goes out the window. So I would always suggest that you stick within your budget. And then in the planning, you have instruments like a retirement fund, which every year you can place funds away, get a tax deduction in that year from your taxes, and build quite a solid retirement fund benefit for yourself. A lot of South Africans like property. They like to have second properties. They like rental properties. We have to remember that some of them are cyclical. So you would do extremely well in a property portfolio, and then you would have bad years. So one has to always factor in that your property rentals will never be a straight line. You make a lot of money, and then it sometimes slow down, and then you get to making a lot of money. What is also relevant there is that you must have a fund that every 10 years that you can renovate your properties and make sure that the rental stays fairly strong for you on those assets. We also like that you diversify assets into different currencies, and we quite like shares, equities worldwide. So what you would have is growth within, call it the dollar or the pound or the euro, and you'd have dividends that come through in the dollar, the pound, and the euro, which is really beneficial for your South African assets to keep your income going. I also believe that, you know, the tax planning around your retirement is important. The government have a 500,000 Rand tax-free benefit. I always say try and take advantage of it, albeit that you can only put 36,000 Rand a year into these funds as we stand in this year. But you can really build up a nice, strong tax environment for yourself. If your tax is fairly high, we believe that your capex assets, in other words, if you need to replace your car at a stage, or you need to do a renovation on your house or something like that, you can build that in an endowment, which taxes again at 30% rather than your higher 40 or 45, depending on your tax rate as an individual. So I think, to answer it simply, you need to diversify your assets. The budget is very crucial. I also think an emergency fund is vital, just in case certain things go wrong and you've got access to money immediately. That would be obviously a bank account or very close to a bank account.
Okay. All right, coming to my last one now.
Sure.
How can a financial advisor help someone adjust their retirement plan if their circumstances change later in life?
You know, it's actually very interesting. I always say that when your relationship with money is important. So the day you get your first salary, you need to remember that at least 10% of that fund should be put away. So if you break down that relationship with your funds, you tend to spend more than what you save. And that I always say, try and get it right at the beginning, where you ensure that your relationship with your funds is always save at least 10% of your money for the longer term. If you're buying a property for rental, if you are putting money into a pension fund, if you're putting money offshore. As you get older, you can then extend that, you know, even to 15 or 20% of your income. You know, once the children are out of your hair and you now have more liquidity, you can then accelerate that plan. I would just always say that be very aware of where you invest your funds, because a lot of people would leave their money in the bank and they do not get the long-term growth that they would make if they had a diversified portfolio, as it were. And therefore we would say, you know, make sure you're aware that your money works as hard as you're working, you know, over the time for your retirement. You know, I've had clients that's in their 50s and don't have enough retirement savings. And I've retired those clients, and it ended up with the hard work we did in their 50s. We managed to have pulled off quite a solid retirement. So I think that whole thinking is, you know, plan and don't give up. You know, if you think you're 50 or 52 or 53, you're never going to retire at 65. We've proven over and over that you can still pull it off. And it's actually interesting when you focus on something, how quickly you can solve those problems.
Okay. All right, Tancred, thank you so much for your time and your valuable advice. It was lovely chatting to you. So my question to you is, where are you in your financial journey? Regardless of where you are, Morebo is here to assist you. So please do reach out to us.